If there's a way to say add a unit or add bedrooms, which, maybe I can put $100K into the property, that makes the value go up by $500,000, and now it's breaking even.
Hey everybody, welcome back to Cashflow, the podcast where we talk about turning properties into profits. I'm your host, Jason Yoss, here today with my guest, Monroe Herington. Monroe.
What's up, buddy? How are we doing?
Good, brother. Thank you so much for coming on.
Yeah.
I know it's been a busy day for you.
Yeah.
Getting after it.
Getting after it, man, as always.
That's the way it's supposed to be. I think you had the good quote of like, when it rains, it pours.
Yeah, when it rains, it pours.
That's the way we want it to be right now.
Yeah.
I appreciate you taking the time out, especially from a busy schedule where we got going on. And I just want you to kick off. Tell me a little bit about, what you're doing right now, how long you've been in the business, how you got started.
Yeah, my pleasure. Well, where do we start, right? But, been in the business a little over 10 years. Got started up in Lake Tahoe, moved down to San Diego in 2015. So been down here since then, PB, Mission Beach, just kind of really focusing on that market there, central San Diego coastal areas. Really have a love for cash flow as well as luxury coastal properties.
Absolutely.
So that's kind of what I focus on. Love waterfront real estate. And then I love multi-unit as well. And we have a specialization with short-term rental properties because that's kind of how you can get numbers to actually make sense at the coast.
I want to talk about that too. I want to talk about that a little bit.
Yeah.
You're not doing this all on your own though. You've got your own team. Is that correct?
Yeah, I mean, I don't think we ever fully do everything on our own as much as people like to make it sound, but, it's pretty much just me, a solo agent. And then I do have one, buyer's agent on my team, Isaac, and he's doing well. But for the most part, I've always been a solo agent, never was on a team. I just kind of work better independently, less distractions.
I totally understand that. How did you decide that, this is going to be your niche? Like a lot of people talk luxury, they never get to, and tons of people talk multifamily, and they don't know the first thing. But talk to me about your progression of like figuring out that's a niche you wanted to be associated with.
Well, I started out with Sotheby's, so they're more of a brand catered towards luxury. Right. I kind of ended up there by accident, joined an independent brokerage. They sold to Sotheby's, and I was like, oh, I'm with Sotheby's now, I guess.
There we go.
Anyways, who doesn't love luxury properties, right? And where I was selling in Lake Tahoe, I was touring. I remember touring a $90 million lakefront estate. And just being around that energy, seeing those properties, like who doesn't want to sell this, right? If you're going to sell real estate. Right. So, and then, progressively when I moved down to San Diego, drove around all the markets, and I really liked the area of Point Loma at the time. And since I've progressed more PB, Mission Beach, as I said, La Jolla market, but I know all those markets really well. And it was just, I want to love what I'm doing. I want to like where I'm spending my time.
Yeah.
I had actually brokers and people telling me, oh, you should go, I-15 corridor. There's a lot of,
really?
Cookie cutter houses. It's easier to sell. They're all the same, easier to comp out. And I'm just like, I'm looking at my eyes are glazing over. I'm like, what are you talking about? Like, I'm not going up there. I'm staying at the coast where I want to be. So I think that's, the main thing, just like, approach whatever you're doing with passion and excitement. And so that's, and then as far as the multi-unit is concerned, I was selling a lot of properties in Mission Beach, representing a lot of younger investors, in their 30s and 40s coming down from San Francisco Bay Area. Right. And, these are tech guys that are very smart. And I'm like, maybe they know a thing or two. And they're looking at the numbers on how the short-term rentals are performing in Mission Beach.
Right.
Plus, they just love the lifestyle. Part of it is they want to use it too.
Sure.
And so I just kept running numbers on deals for my clients and just kind of found a knack for it that way. Right. Started out with duplexes and smaller multi-unit buildings, and it's just kind of scaled up from there.
That makes a lot of sense.
Yeah.
I know we talked a lot of before. It's so tough to make beach, not even beachfront, but beach coastal multi-unit make sense unless you're able to play with those numbers. So did you have a mentor help kind of shape some of your vision on this, or was it just you've been doing enough, you learned by going to seminars, reading? What's your background on mentorship and steering your philosophy?
Well, I've had a lot of mentors over the years, and it was never like one specific, like, oh, will you be my mentor? It's just
Right.
it's just like taking it in and listening to people that, know more than you
Sure.
in those areas. And I think the main thing is just getting experience, and again, like getting those leads and working those leads and just and learning from them. I learned so much from my clients. That's what I think a lot of agents, they think, I'm the advisor. Well,
Sure.
true. But like, if you approach it, from a place of humility and just help out where you can, you will learn from these people.
Right.
And these are business people that are worth, hundreds of millions of dollars sometimes. And take everything you can, follow what they do. And then emulate what they do.
You've got to learn from every transaction. 100% right.
Yeah.
Whether it be from the other realtor, whether it's a situation or your client, you're 100% correct. If you're not gaining knowledge and experience from every transaction, you're not able to press it forward, kind of like you've done here. Let's talk a little bit about deals, especially on the multifamily side. Like, what are you looking for when you're eyeballing a deal? And talk to me about how you've kind of created this methodology of getting more out of a deal than other people might not be able to do.
Well, I think you're always just looking for value add plays.
Okay.
And a lot of people hear that and they think, physical value add.
Right.
But there's also value add from a business perspective, how you're operating the property, right? Thus, long-term rental. Is it a mid-term rental? Is it a short-term rental, right? And I haven't purchased large buildings that needed a ton of physical value add and fix up work.
Right.
But, I was able to go in, one of the buildings I purchased, a 3-unit in Mission Beach, we were able to double the income that it generates through optimizing the short-term rental.
Wow.
And, I've been through a couple different property managers and got to a point where we were like, hey, let's start our own management company because everybody keeps dropping the ball and their pricing's off, their customer service is off. So, really going in and optimizing it that way was a good lesson. And now I'm starting to look and pick up more properties that have room to build an ADU or add bedrooms or whatever the case may be. But I think it's just always looking at the numbers and do the numbers make sense or will they make sense after I do my renovations?
Got it.
Is
there some kind of pass-go criteria when you're evaluating a building? Like, I think we had this conversation before. Like, I'm in the long-term space, and a lot of times an investor will come to me, and they'll look at the numbers and say, well, if it's not a 6 cap rate, I'm not doing it. And when I first started out, I would get if it's not an 8 cap rate, I'm not doing it. Talk to me a little bit about how you evaluate it from those standpoints, and give me some tidbits on how you're penciling numbers differently with a short-term rental to actually meet those pass-go criteria.
Yeah, no, it's actually funny. I was having a conversation with an investor, I think it was yesterday.
Got it.
And I have this 8-unit building on the market right now in Pacific Beach on the bayfront, right? And he, we're talking the cap rate, and he's, trying to value it based on the cap rate, and I'm explaining to him that yes, commercial multi-unit real estate for anyone that doesn't know is 5 units or more. Commercial multi-unit, yes, it is valued based off of the income it generates.
Right.
However, when it's on the waterfront, you have to look at it from a different perspective and see, okay, well, what could this property generate if it was optimized?
Right.
And in this case, really getting the numbers to make sense on that property has to be a short-term rental. I'm sorry. It's just like, it's operating at a 3% cap rate.
Yeah, as a long-term.
A long-term rental, if that. But if you convert it to a short-term, then it'll operate at a 6% cap rate. And then you could also argue the value of the building goes up because you're now operating at a higher cap rate. Yeah. My criteria for personally, like I read Rich Dad, Poor Dad when I was young, like everybody has, but I took a lot of that information to heart and I'm like, hey, I don't want to put myself in a position where I'm strapped for cash and I have all this anxiety. A little bit's good, right? But if you don't want to be overextending yourself either. So when I'm looking at deals, I'm like, is there a way that I can make this deal break even? If it's really negative in the cash flow, I'm not interested. I'm sorry. I've had people come to me and try to push these deals on me, but this and that, and it'll appreciate. I'm like, I don't care.
Yeah.
I don't want it taking money out of I don't view it as an asset.
Right.
Now, if there's a way to say add a unit or add bedrooms, which, maybe I can put $100K into the property, that makes the value go up by $500,000, and now it's breaking even. Let's talk, but I don't want to buy something that is going to require me to fork out money every
Right.
month. And that is very difficult to do
Right.
in California and in these coastal markets. So how do you do that?
Right.
By either value add physical to the like physically fixing up the property,
Right.
or by,
And
or just finding a good deal.
That
That's
takeaway is
possible
great.
too.
Yeah, I mean, finding a good deal is
Yeah.
that's huge, right?
Right.
And it's hard. It's hard out there in coastal to find a good deal. What are your methods of like, this is how I'm locating deals that make sense? Talk me through an example of like you found a deal that maybe people passed on that you were able to pencil it and make it work.
Yeah, I think, that's a really good question. I think it's like picking a market. Like a lot of people are like, oh, I'm looking all over the county, and maybe that works for them. But again, like Mission Beach, yeah, like I just like that central San Diego. Like if it's in OB, it's in PB, it's in Mission Beach, it's in La Jolla. Like I know those areas. Right. I know what works. I know how to run numbers. And like, if it's in those areas, then I'm excited about it. And when I first started out, it was specifically just PB. Right. But now I branched out a little bit. And so maybe I'm just not at a level of maturity in my investing where I am looking nationwide, and maybe I will. But for right now, I'm just I know what works for me, right. And that's smaller, 2 to 4 unit properties that are very coastal and luxurious that I can operate as great short-term rental properties.
What is that thing about coastal that makes it different than looking at like a corridor? Why? Mm-hmm. What is it about coastal that other people can't figure out? And now that you've been there for so long and you do know your way around the market, how are you able to set your knowledge apart and get you to find that deal or get a client to be able to realize a good deal?
Yeah. So how to find the deal?
Especially coastal. Again,
well,
you could go the I-15 corridor, right? And it's like,
yeah, and I wish I could say that it's something, super special that I'm doing. I do work in real estate. I am a real estate agent. So I think every property that I've bought has came across my desk as a real estate agent, right? So I've either been showing the property and it doesn't work for the client, but then it works for me and I like it no matter how much I tell, and I end up buying it. We just closed on one last Friday.
I want to talk about that one. Yeah, I want to talk about that one.
That was a property that I, located, but I first located it, right? But I was looking for a client, but maybe it's just the difference is like maybe if you're an investor and you're not working as a real estate agent, you're looking for yourself. Right. But I spent a lot of time looking for deals for clients, and I found this property a lot like a listing that I had in which he and I met on, sent it over to him, showed it to him on a Sunday afternoon. I still to this day have not heard back from this guy.
Really?
He straight up ghosted me. Like we had a great rapport, and I like maybe he'll, sometimes people will reach, they get busy. Hey, Monroe, sorry, later down the line. But I, reached out to him and I was like, look, I'm interested in this property now. Sure. And I tried to, communicate that to him. But anyways, he obviously wasn't interested. And when the agent had called me back to follow up with me in regard to my client, I just said, hey, I haven't heard back from him. I was like, man, this is such a great deal. I'm so surprised that it hasn't sold. I for sure thought it was going to sell for over $3 million when I first saw it, because my duplex that was kind of similar down in Mission Beach sold for over $3 million. Right. And I'm like, I think this is a much better property. Nice. And I just asked him, a question. I was like, would the seller consider financing it?
Huge.
Because right now it's hard to get anything to pencil with interest rates being where they are.
God, crazy interest rates.
So I basically asked if they'd consider it. He said yes. So I put in an offer, know. So I think that, like, coming back to your point of how to make deals work, well, you got to play with what you can, right? I saw that the seller owned this property outright. And fabulous. I was like, well, maybe they'll consider financing it. So
the fact that you were able to go to that next level, we talk about making a good deal or finding good deals. You asked, hey, would the seller finance? And the agent, obviously, nobody knows the real pain behind it, but that question opened the door to like, not only will we take your deal, but we'll do financing. Yeah. Talk to me about through that piece, and then how did you get this thing to pencil? What was it, just rental, or did you do value add? How'd you take it to the next steps?
Yeah, so what we're going to be doing with the property, unfortunately, we had an experienced agent on the other side, so Wonderful. He was able to have that high-level conversation with his client about the seller finance. So that's a big part of it as well. And, in coastal markets, especially like La Jolla, you're dealing with some pretty sophisticated agents. So that, I thank you, Greg. It was Greg Noonan on the other side of it. He's very, very good, very good agent. And so, yeah, we were able to make it work and make the terms work and make sense. And so that took the monthly payment from what would have been like $17,500 down to like $12,900.
Okay.
So it would not have cash flowed under a conventional mortgage, and I probably would not have done that deal.
Got it.
But because the seller is financing it interest only, so it's nothing is going towards principal, also lowers the payment.
Right.
So not only is the interest rate lower at 5.5%, versus, what mine would have been on a bank statement loan for high 7s, 8s. I don't even know. It wouldn't have worked. There's no payment going towards the principal.
Right.
So that keeps the payment low.
And so you got a third of the less of the payment by just having a high-level negotiation with an experienced agent and with a seller who has the ability to own the property, I'm assuming outright. So they
for
have
a
the
long
ability.
time, yeah.
Right.
Exactly. They've owned it outright and owned it for a long time.
Which is a win for them. It's a tax benefit that they don't have to get it all at once. They can take it a little bit.
Totally.
And
yeah.
it then frees you up. So with that extra cash to make the deal work, what's your plans?
So, yeah, so even through the course of the escrow, we were able to renegotiate some of the amount that I was putting down. So it was originally negotiated at 30%, and then we were able to renegotiate it at 25%. So that saves me, $140,000 on the down payment. Now that I can do value add, and what we're looking to do is there's a 2-car garage, so we're probably going to convert that 2-car garage into an ADU, which that is probably the easiest. Biggest bang for your buck right now as far as value add is concerned in the coastal and anywhere in San Diego. So adding more units, right? Adding more doors, ADUs. So we're going to convert that into an ADU, and then we're actually going to build a bedroom above that ADU, not for the ADU, but for the front unit, because the front unit's a townhome style. So the second floor, both the bedrooms are on the second floor. The master's going to go out over that ADU. Wow. So we're going to be adding about 1,000 square feet, and at $1,000 per square foot, well, that's $1 million, right? And that remodel is going to cost about $250,000 in about a year's worth of time. Not to say the property is going to be vacant that whole time. Might be vacant about six months out of that, or I just move into it while that's all happening.
Gotcha.
But there's a prime example. You're quadrupling that. That's a 4x on your money.
The idea is you got a duplex with a garage, which, as you said before, garage conversion on ADU is probably one of the easiest ways to get units right now because you have an existing structure. And then on top of it, you're going to be able to add size, which I'm sure increases your rental capacity and increases value to the property.
Correct. Yeah.
And you'll be taking rental income, except for probably when you're hitting the hammer, you'll be taking rental income that whole time.
Correct. Yeah, exactly. So right now, like when I underwrote the property, when we renegotiated the down payment, it's negative about $1,000 to $1,500 a month in the payment. But I was okay with that because I see at the end of the tunnel, I have some capital here that I'm going to invest in the property. Once the remodel is done, the remodel meaning the ADU and the other master bedroom, it's going to add another bedroom and an office. So now it goes from a 2-bedroom townhome style unit to a 3-bedroom with an office. It's almost like a 4-bedroom. And once that's done, it will cash flow a few $1,000s a month. And so that's a prime example of will I purchase a property if it doesn't cash flow out the gates? Yes, if there's a value add play in which I can get it to cash flow.
And that makes 100% sense. You have tons of developers, not just here in San Diego, everywhere. Of course, they bought a single family, want a huge lot because they're going to put up 20 units. Well, yeah, it's negative in the beginning, but the end state value is what's going to be cash flow. So I appreciate you breaking that out.
Yeah, I mean, what business isn't negative in the beginning?
You're 100% right. And the mentality to that is that's exactly what we want to show people, that's how you can take something that does start negative and the end state is positive.
Totally.
What's your exit on it? Is this a buy and hold long term, or is this something where you sell at the end?
Yeah. Well, I haven't even thought that far down the road. I think every property I've purchased at this point in time, it's probably buy and hold long term.
Gotcha.
But from a tax benefit, we do cost segregation study on them, which is basically you're taking the 27 and a half years of depreciation, which you can depreciate the building, not the lot, the building value. You're bringing that forward in the first few years or whatever. But those benefits are, I guess, slowly going away. But anyways, point being is once that depreciation is taken, you don't have that
use it
write-off
up, yeah.
anymore. So you got to kind of parlay it into bigger investments. So down the road, will I liquidate in 1031 exchange into bigger,
units, yeah.
like probably, like
Right.
let's be honest. But a couple of the properties that I own are like trophy type properties that I'm like, I probably will keep this in my portfolio
Right.
for a long time, possibly for life. But, you know, I have purchased other properties that I'm like, I'm not, married to that one,
I
so
understand.
that's kind of the thing.
That's a chip to play in later.
Yeah,
Absolutely.
yeah.
I love that. Let's take a look at if we kind of rewound the clock and we're talking to Monroe from, 5, even 10 years ago. What kind of advice are we giving to him about, hey, this is what I want you to focus on out the gate? One or two main things. It's like, hey, you need to do this.
Yeah, I always share this story. I've told this story probably 100 times, but it was my first lakefront property that I sold up in Lake Tahoe. And this guy would pull up in a different supercar every time I saw him. As a McLaren, I think he even had a Porsche GT, like sick cars, right? And he's taking me for a ride in his McLaren. I'm like 22 at the time, right? And I'm just like, if you could give me one piece of advice, what would it be? Just one piece that I can implement. I didn't want a whole, because I know how that can get overwhelming. And he just said, he just said, focus.
Yeah.
He said, focus, find something and get really good at it. There's going to be other people coming to you saying, you should do this or you should try this, and coming to you with all these different opportunities. Yeah. It's not to be closed-minded, but it's to really focus on something and develop expertise in a certain area, and then you will start to open up other verticals. Well, he didn't go this far. Anyways, I'm just saying you'll start to realize that other verticals will start to open. He didn't even tell me that, but that's something you realize as a natural progression as a business person.
Right.
But if you don't get really good at one thing, you're never going to have, you're just going to be a little scatterbrained and have all these ideas, but nothing ever comes to fruition.
100%. The fact that you are a successful agent, has that also helped in fast tracking your ability to be a real estate investor?
If I wasn't a successful agent, I would not have had capital to become a real estate investor.
Right.
So no, you
Yeah.
know.
Right.
So that.
And we talked about that before. Like, if you aren't making money, like what are we talking about investment for? You're not even making any money. Like, make some money.
Yeah. I love the whole OPM movement, the other people's money movement.
This is true.
And when you become more savvy and you learn how to raise money and leverage properly,
right.
But first you have to become savvy.
Got it.
And I don't know. I just think that there's a lot of misleading information, because you got to think about a lot of the content creators and stuff on YouTube. They're running a business as well. So you just kind of got to, see between the lines and just realize that there is no substitute for hard work and focus.
Yeah. Mm-hmm.
I mean, that you ask anybody who's any one of those guys that's creating that content, and they were grinding.
Absolutely. There's no substitute for grinding. I will put that on everything. Yeah, I mean, it does help to have bank of F&F, friends and family, bank of bank of parents. But until you can drive your own capital, make your own money, and grind out your first investment, like, what good is it if I borrow money if I don't know what I'm doing?
Yeah, that thought of borrowing money when you don't know what you're doing scares the crap out of me.
It's crazy.
I'm not into it. Yeah,
I don't want to give money if I'm.
Who's gonna invest with you? Who's gonna invest? In your brand if you don't have a track record. So I think that's the main thing. Is like, hey, get a track record. So if you're new getting into the business, it's not to discourage you. It's just to say, like, hey, pick something, find a lane, stay in that lane until you become very, very successful in doing that. And then, that'll naturally parlay into other things.
As we wrap up, kind of last question for you. What do you have going on right now, and where do you see yourself moving towards with your career over the next, 2 to 3 years?
Well, and again, talking about the verticals, right? So I kind of am looking at things from my, with my investor hat now, and as well as my from a real estate agent perspective. And I don't think I'll ever stop selling real estate, because I can do it pretty effortlessly now, and I've got my systems dialed in, and I actually enjoy it. I enjoy providing value and representing clients. So just continue to scale that up. I'd like to see in the next couple years, doing at least $100 million in production in my real estate business. I think we did close to $50 million last year. So just scaling that up, becoming even more savvy in, different types of commercial real estate. I don't want to limit myself to one, type of real estate. So, just continuing to scale that, more luxury properties, bigger multi-unit buildings, and then even dabbling in the commercial side and businesses, and starting to look, just because it's good to expand your mind. But I again, coming back to the point, is like I was really focused on residential prior to getting into all those things. And then on the investment side, I mean, that's very exciting. I don't know where that's going to go. I could see myself potentially, creating a fund or doing more syndication type deals to really start scaling that out. We'll see where it goes.
It's super cool when you get that, like, look, confidence of I know what I'm doing. I have a track record. I have case studies to show you that I can do this. If you put that trust and confidence in me, AKA dollars, like, watch me do it again, not just for me, but for you as well.
100%. Yeah, and I finally feel like I'm in a place now. I've probably been ready. I could have probably been successful doing that some years back, but now I can say with absolute confidence, like, I know how to underwrite deals and look at these situations and not put your money at risk.
I love it. I love it. I again, Monroe, thank you so much for coming on. The way you decided to talk about using short term and using value add to provide not just value, but to make deals pencil out, coastal and luxury. It's a huge win. I know our audience is going to love it. So Monroe Harrington,
that's awesome.
Thank you so much for being here. Everybody else, thank you for tuning in to the Cashflow podcast. Stay tuned. We'll see you next week.